at the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live. I'm Alex Matthew. Well, let's take you through the headlines first. Asian markets trade mixed after China lowers the growth target for 2019 to 6% from the earlier 6.5%. Oil heads lower after API reports U.S. crude supplies rose more than the expected 7.3 million barrels in the week ended March 1. Cigarette maker ITC hikes the prices of three brands, Bristol, Flake XL and Capstan, by about 7 to 14%. Three packages containing improvised explosive devices were mailed to two London airports and a major train station. No casualties have been reported. Let's talk about international markets now. Let's, in fact, begin with the action on Wall Street. Tuesday's session was volatile as stocks ended marginally lower. There was a brief cheer after home sales and services data beat estimates, but the lack of any information on trade negotiations between China and US weighed on sentiment. Abigail Doolittle of Bloomberg News brings you this report.
Stocks finished slightly lower in Tuesday's Wall Street session. This after whipsawing between very small gains and losses. But at the end of the day, the Dow, the S&P 500, and the Nasdaq all fell on a fractional basis. But for the Dow and the S&P 500, that does represent the fifth down day out of the last six sessions, perhaps a little bit of a trend shift, at least treading water to 2019's big rally. Now, one piece of that stopping of the rally, resistance on the S&P 500 around 2,800. Many analysts are talking about that as being a key selling level as valuation and overbought conditions come into play. Now, beneath that very calm surface for the major averages, there were some decent-sized movers for the S&P 500. There were some big retail movers, including Kohl's and Target. Kohl's was up 7.3%, Target up 4.6%. Both of these department stores, and Target being a big box retailer, they put up better than expected holiday quarters, and they also gave a rosy outlook for 2019. Investors cheering that. Facebook and Alphabet, one part of the FANG trade, those shares both traded by more than 1%. So some investors having confidence in those big internet names. Where there was less confidence, though, the chip sector down about 0.5%. And two of the big drags there included Micron and Western Digital. This is a Wall Street analyst at Susquehanna is citing memory concerns. Those shares both lower, really dragging on that stocks. And when you put it all together, stocks down fractionally, bonds about flat, commodities up a little bit. Wasn't really a risk on or a risk off day. Neutral risk appetite on this Tuesday. Investors waiting more information for either the bulls or the bears to take over as the week progresses. From New York, Abigail Doolittle, Bloomberg News.
All right, let's also take a look at how the Asian markets are faring. Rosalind Chin of Bloomberg News is joining us from Hong Kong with all the updates there. Rosalind, good morning. Concerns about growth. How are you looking at the start of trade today?
Yes, things are looking a little bit mixed here in the Asia region right now. Not a strong cue, of course, coming from Wall Street. Right now, we do have the MSCI Asia Pacific absolutely, completely flat. But if we look around the region, we see that in Japan, the Nikkei is losing about 0.2%. The TOPIX also lower by 0.29% at the same moment in time. Now, in Japan, we've had some news, from in terms of the trade negotiations between those two nations, with the U.S. saying it wants a currency clause in any trade agreement. Japan has recently said, the link between exports and the yen has been severed. But of course, any decision to tie currencies or make it part of any agreement, of course, would make it much more tricky for the BOJ in terms of any policies it wants to unroll in the future. So that is something to watch regarding that. Now, elsewhere in the region, of course, we've had China coming online very recently. That is helping to lift up stocks very slightly, the MSCI Asia Pacific, now inching into positive territory. Previously in the session, it had been in negative territory. Hang Seng gaining by 0.15%, the Shanghai Composite up by 0.5%, and the CSI 300 making gains of just over 1/3 of 1%. Now, we do, of course, look for any cues which may be coming to, which can propel the markets further today, because we don't have a lot coming out from the MPC this day too. We've got State Street Global Advisors saying that investors have already priced in a lot of good news. So now we're looking for a lot of proof of the pudding, as it were. So some stronger data showing some stabilization of global growth, perhaps some more concrete details coming out of US-China trade talks. Those are the kind of things that may be able to help propel stocks convincingly higher. In Australia, we've had some data out. The fourth quarter GDP was a miss, coming in at 0.2% quarter on quarter against estimates of 0.3%. Yesterday, we had the RBA holding rates, the benchmark rates, at 1.5%. But of course, now this fourth quarter data leading some to suggest that, a rate cut is more likely to happen. Dovish noises coming from Philip Lowe, the RBA governor, of course, adding to that speculation there. So right now, we have Australia's S&P ASX 200 making gains of 0.6%. The Aussie dollar did fall to a 2-month low of 0.7052 US cents. Currently, right now, it's at 70.59. Back to you.
Thanks so much for that, Rosalind. Well, talking about the last point about the central bank in Australia, perhaps talking about cutting rates, concerns about growth, not just in the US, are making central banks more accommodative. In fact, Boston Fed President Eric Rosengren has said that the recent dovish stance adopted by the Federal Reserve may last longer than anticipated. Kathleen Hayes of Bloomberg News brings us this report.
Since Jay Powell, the Fed chair, has made it so clear the Fed is taking a patient pause, other Fed officials as well, it isn't that the message got different. It's just that somebody, Eric Rosengren, president of the Boston Fed for many years now, who was one of the leading hawks. In fact, at the end of 2016, end of 2017 going to 2018, he was already predicting 4 rate hikes for 2018. Hardly anyone agreed. By the end of the year, they did it. So for him to change his mind, this is a really big deal. He cites the global economic risks, market volatility as a big reason, both of them, I should say, for the Fed pause. And he's also looking very closely at what's going on with inflation. Here's what he said earlier.
Fortunately, from the Federal Reserve's perspective, the overheating risk that I was somewhat concerned about over the course of last year, I think has diminished. In part, inflation's remained quite well behaved.
So again, significant. And of course, as he joins that dovish nest, we heard from another major dove, actually, who has been dovish all along, and that's Neil Kashkari, Minneapolis Fed, testifying to the state of Minnesota's Senate Finance Committee, saying that he's focused on keeping the U.S. economy going. In other words, he's not looking at rate hikes either.
Well, dovish, in case you were wondering, indicates a more accommodative stance by a central bank. But on to economic data from the US. Data expected later today is likely to show the trade deficit in the US expanded to over $600 billion in 2018. And that means that the deficit has surged by over $100 billion during Trump's presidency itself. Ender Karan of Bloomberg News brings you this report.
Economists, of course, will tell you it's an academic measure that doesn't especially mean anything really. What this does reflect is robust US consumption. It does reflect, of course, US fiscal policy that through the tax cuts last year that drove economic growth, and of course it also helped the dollar become stronger, which made imports cheaper. Now, of course, the issue is that President Trump has politicized the trade deficit. He's made shrinking that deficit one of his key pledges during his presidency, and that's why he's taking the hawkish trade strategy that he is. And of course, his supporters will say that's the correct approach. But the net effect is that the widening trade deficit reflects the robust US economy, and there isn't any real indication yet that the trade policy and trade tariffs taken so far are going to reverse that widening deficit trend.
In fact, we have seen that the trade policies themselves may have actually caused a bigger trade deficit, with importers rushing to get ahead of new tariffs and just importing more from China.
Well, that's right. This was something we did some reporting on a few months ago with my colleague Sean Donnan over in Washington, and we did find this phenomenon of front-loading, whereby companies were deliberately rushing to get orders out of China and over to the US before either the imposition of tariffs or the arrival of threatened and expected tariffs. At the time, back in January, we heard stories of warehouses in the west coast of the US that were chock full with goods and inventory was stacked high. That phenomenon seems to have eased off a little bit, as of course we can see in recent softer data. But I think it spoke to the sense of concern among exporters at the time that more tariffs are on the way. Now, of course, the trade talks themselves have come a long way since the turn of the year, and if anything, at the moment, it looks as though the trade truce will stay on hold, even if, of course, the broader trade concerns aren't going anywhere.
All right, let's turn to the Indian markets now. Agam Vakil is here to tell you all about the trade setup for the day and also what's happening in the futures and options space. Morning, Agam. How are we looking today?
Good morning, Alex. Well, at this point, let's start off with the SGX Nifty as usual, and we're seeing marginal gains there at well above 11,000. So that, of course, is a positive. Now, yesterday's day of trade was a one of surprise given the momentum with which we saw gains coming in on the indices. So the Nifty advanced by well over 1%. We saw several other indices also advanced by a significant amount. Coming down to your banking indices, again, when it comes to the gains, there were plenty. And both the indices were up as much as 2%. And as far as your American depository receipts are concerned, we've seen more gains with Tata Motors rising around 6%, followed by ICICI Bank up 4%, Vedanta, Dr. Reddy's. And in terms of other ADRs, we only have Wipro, which was marginally in the red. Moving on to your factors when it comes to FIs, both FIs and DIs bought into the equity markets on a net basis. Now, coming down to your contributors, again, it was a day of trade where there was all-round gains, and we did see others, as far as the Nifty is concerned, not just the top four stocks provide for the big gains coming through. In terms of futures and options, we were looking at a little bit of a change of scene, considering a short covering in the preceding day. Yesterday, we saw about 5% increase in open interest towards fresh longs, and as was the case for the Nifty banking futures too. Let's come in and bring up the open interest distribution now. And we still really don't have too much going in terms of an upside with respect to a level. So while there is, while the downside level is evident at around 10,700 based on max OI, even though it is also concentrated on 10,600. On the upside, it's relatively less, so keep an eye on that one. As one might expect, there would be more writing around these puts at around 10,800, 10,900. And moving on to your wicks, again on expected lines, fell by as much as 4% to around 5.6. Put call ratio edging up significantly higher to around 1.76. It's actually at a critical juncture, so we're going to have to wait and watch whether or not there is a little bit of reversal there with the Bank Nifty put call ratio at around 1.87. Just moving on to stocks. Well, we do have Reliance Power and Wockhardt coming into the FNO band very early in this series, so watch out for these. But besides them, let's also keep an eye on something like an REC, PC Jeweler, Tata Chemicals. Of course, there were all-round gains, save for something like a Mahanagar Gas. And on the losing end, or rather on the open interest losing end, we do have something like a Nalco, Oil India, or Bharti Airtel, which stands out in trade. But it's certainly been a very, very good day of trade, Alex, and we're going to have to wait and watch whether that momentum continues.
Absolutely. Thanks so much for that, Agam.
Yeah.
Well, let's talk about what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Trade data, which is to be released on Wednesday, and it may show the U.S. deficit in goods and services with the rest of the world topped $600 billion last year. That would mean President Trump's 2 years so far would have seen the U.S. trade shortfall, the main metric by which he judges countries to be winning or losing, grow by more than $100 billion. The Bank of Japan is to discuss likely a possible downgrade of its view of the economy when board members meet next week. Sources say policymakers may cut the assessment of industrial production and export demand. That would add weight to the dovish shift among global central banks. Recent data shows falling factory activity and the biggest drop in overseas shipments since 2016. The latest on Brexit now. UK Prime Minister Theresa May has reportedly been told that the Brexit vote next week will be tight. Sources say her chief whip has warned the cabinet that he's not confident the bill will pass in the Commons. May has sent a team to Brussels for more talks. But we're told the government is not expecting a breakthrough. And there's a new warning about a no-deal Brexit. It comes from BMW, which says it could threaten mini production in the UK. Former Nissan boss Carlin Ghosn, meanwhile, could be released from jail later Wednesday. That's after a Tokyo court rejected a prosecution attempt late Tuesday to keep him behind bars. Now, Ghosn's bail is set at almost $9 million. He's been locked up since November on allegations of financial misconduct. Ghosn denies any wrongdoing and describes the accusations as, quote, meritless and unsubstantiated. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Year one, it was more about product market fit. You were not bothered about the profitability, and you have spent a lot of money in R&D of technology, of product. So for us, what was an important matrix rather was the product market fit and the usage rate in general. So we have close to 12 to 13,000, sometimes 15,000 writes per day. So this is a matrix which we have been watching, that how much impact we are creating, how many users are we retaining, and who is coming again and again. So those are the much more important metrics than the revenue. Although everything is paid for, we do get money. Our net burn rate is very, very low. So we are doing pretty well on
Can
the
you give me some
front.
color on burn rate?
So we don't talk about it, but just to give you a sense, we have bought close to so actually more than 15,000 vehicles till date, which are this vehicle and the human powered vehicle, and we have runway of more than 3 years. So our burn rate and the money in the bank is big enough, which is just keeping us floating. So we've raised a lot of money, although not spoken about it.
Yes.
But we have raised a lot of money because of the credibility. Money came without any effort. At the same time, money in the bank is also important, and we have done well. So almost 2.5 to 3 years of runway, which we have. Even if we don't do anything, company just floats.
And you haven't really, spoken about the kind of investment you have raised, who are the investors. Talk to me about who are these investors who have backed, how much of the investment you have raised so far?
We have raised the money from institutional and family offices. Institutional seed capital investors are family offices.
From?
So you know that Bloom has invested, 314 has invested. There's a big Japanese family office. They have basically given us a huge check. And then we have a bunch of supporters, people like Bini Bansal of Flipkart. He's an angel investor. My ex-co-founder Naveen, Mohit from InMobi, they are investor in this company. Girish from Freshdesk, Amit Ranjan from SlideShare. So if I basically talk about my supporter list,
right.
I'll take 15 minutes in talking about all of them. But interesting part is, out of this friends, if I talk about the money which that come with accountability, where someone else was an LP, that money actually is a 90% number. So yes, there was a credibility of the team, but at the same time, it is a responsible money. It did not come, without going through an IC process. And we are talking about, at least in the beginning, using this money to buy these assets. So we needed a lot of money, and we were not shying away taking money, and people were not shying away, betting on us.
Right.
So we were lucky. We did well on that.
So how much have you raised so far?
So actually, we have raised close to $7 million in our seed round, and as I said, we did well. We never spoken about it. We thought that money is not a criteria of success. What is more important is you get the product market fit, do well, and I think if I look back over last 1.5 years, we have come across a long way.
There are a bunch of stocks that we need to look at today, starting with Reliance Capital. ICRA downgrades rating for the short-term borrowing program to A1 from A1+. Downgrade was due to refinancing risk of short-term maturities and delay in monetizing the non-core investments. Company considers the rating action completely unjustified and inappropriate. Diwan Housing Finance Limited releases an independent CA report on the Cobra Post allegations. The findings suggest that DHFL has not created shell companies and diverted funds. Auditor does not find merit in allegations of loans said to be a part of Sahana Group and or Vadhavan Group. Allegation of political considerations is baseless and without merit, and no evidence was found in relation to allegations of tax fraud. Then we have Endurance Technologies, promoted to sell 63.6 lakh equity shares with greenshoe option of additional 41.9 lakh equity shares to non-retail investors on March 6th and retail investors on March 7th. The floor price for the offer for sale is set at Rs 1100, which is discounted by 12.6%. CDPQ to invest over 1,800 crore rupees into ECL Finance, the NBFC arm of Edelweiss. The investment by CDPQ will take place in 3 tranches and will fund growth capital for the next 3 to 4 years. Quick Heal Technologies to buy back 63.6 lakh shares at 275 rupees per share. Total buyback is worth rupees 175 crores, which is 23.87% of net worth. Lastly, let's have a look at Indian Energy Exchange. On all India basis, the energy supplied on February 2019 was at 95 billion units, which registered a marginal increase of 3% compared to last year. The electricity market at IEX traded 2,879 million units in February, registering a decline of 15% over last year. And lower volumes was primarily due to extended winters and subdued demand for power from northern and western states.
Just want to point out here, we're going to be dealing with this in a lot more detail when we come back on the 8 o'clock show. This is, of course, a notification that was sent to the exchanges by DHFL, and it is with relation to the concerns of corporate governance that were raised by Cobra Post, allegations that were made. An independent CA report has been placed on the exchanges through a notification. This independent CA, of course, is TP Oswal and Associates. In it, TP Oswal suggests that there are no suggestions of the creation of shell companies and diverted funds as alleged by Cobra Post. However, it did find some lapses in relation to pre-sanction due diligence and in monitoring of post-dispersal end use of funds by borrowers. We'll talk about that in a lot more detail, so do stay tuned. 8 o'clock is when we will talk about it, but there are also several other stories that you can find on the website bloombergquint.com. Of course, all the live market action right here. First up, let me tell you about this story. The government-appointed Board of Infrastructure Leasing and Financial Services Group has charged 14 former directors of group firm ILFS Financial Services of facilitating money laundering, sanctioning loans in violation of rules, and causing huge financial stress and losses to the company. In international news, 3 packages containing improvised explosive devices were mailed to 2 London airports and a major train station on Tuesday, according to a statement by the Metropolitan Police. The MET's Counter-Terrorism Command is investigating and treating the incidents as linked. The white postal bags each contained small devices, one of which was opened, causing it to ignite. That's according to the police. Well, that's all you need to know going into trade today. Do stay tuned, of course, for all the updates that I talked about with regard to DHFL. This is Bloomberg Quint.